You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time for a new year of Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. A new year for the network. Should be all sorts of fun things in store for you guys. We got a lot of fun stuff rolling out in the coming months, so stay tuned for that, of course. You can still find all of your favorite programs in all of your usual suspects, your iTunes, your TuneIns, your Stitchers, also via our mobile app available for iOS, Android, and the beloved Fire OS. And, of course, you can join us live on this program every Friday, noon Central, 1 p.m. Eastern, via Mixlr, Mixlr. If you don't know the link, just follow us on social media. We tweet it out there and Facebook it out and stock tweet it out and all the other ways you can get it. And once you have it once, just bookmark it. Or if you are so motivated, you can follow us there in Mixlr and get notified the instant we go live. I think you never miss a live show. For all of you who say, I really want to be in there as soon as the stuff's happening and breaking, well, we make it easier for you. And if you do miss that, but you want to get it before it goes live in the beautiful edited, podcast version the following business morning, then indeed you can always go get it on the archives there at Mixlr as well. That's a raw version. That's not going to sound as pretty as the edited final version, but still, some people who want that immediacy, we make that available for you there as well. And however you listen, live, after the fact, however you get it, via Donkey Cast, however you do it, make sure you send us your questions, your comments. We love to hear from you guys. And joining me on the old program today, my usual cast of characters. I'm not sure where everybody is, so let's just go in order of how they appear on my screen. So let's start off with the greasiest of meatballs himself, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line. Mr. Greasy Meatball, Happy New Year to you in this at least quieter start to 2017.
Yes, it's a beautiful new year, a beautiful, beautiful day across the board. All is well. You know what? My New Year's resolution is for my Where is the Meatball music to officially be added into the Vol Views list of silly songs that we get in front of our segments.
You have to remind me. I'm going to be doing some new VO for the new year here. So when we do that, just shoot me a reminder, and I'll see if I can come up with something suitably silly for you. I mean, that means, of course, you'll have to have some sort of segment that goes along with that. So prepare your content appropriately.
We can turn it into like a Google Maps game.
There we go, because we know all the kids love the Google Maps games. So
no, dude, it is actually that's like a big game. People would be like, they show you a picture of an area, and then you try on a map to guess where it is, and they use Google like Street View for all the different images. It's a really popular game.
How about we just swap it out?
Have nothing to do with their day.
Instead of Pokemon Go, we have Greasy Meatball Go. And there's this little U's all over the place, so we map it with the Google Maps data, and you can we throw meatballs at you to trap you, and then there you go. We can sell add-ons.
In the spirit of Italians, I feel like it should be Super Meatball Run.
There we go.
Nintendo fame.
Super Meatball Go. You throw meatballs at them. You can throw a Pika meatball that will sell for upgraded in-game currency. I like it. This New Year's already off to a great start. And unfortunately, he has no mobile games of his own, but he is beaming in from the corner office over there in the mecca of volatility, aka the CBOE. Mr. Russell Rhodes, the head of education over there at the Options Institute. Mr. Rhodes, Happy New Year to you as well in this quieter volatility start to the year.
No kidding. It's very, we had a big group yesterday visiting the exchange, and they were actually visiting after hours. And we were in the S&P pit with about 150 people talking about how things used to be, and somebody said, well, does it ever get loud down here? And my instant response was, well, not this week, because that's kind of how it has been. Things are relatively quiet in the world of volatility and index options. You would think that we are still on holiday, which we are not.
They actually asked you, does it ever get loud down here?
Yeah, does it still get loud down here? And I was like, yeah, but not this week.
Just go back like 10 or 15 years, and then what a sight to behold it was. A little bit different beast.
We still have some audible volume from down there every once in a while.
That's true. That's true. Do you have it piped into your corner office so you can hear exactly when the roar is building?
I can barely hear it, but if something dramatic happens, you guys listening will know it first because I'll hear it audibly from the pit, which is right below me right now.
There we go. All right. With our team assembled, let's dive right on into our new year with our first Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, this is the portion of the show where we break down the week that was from a volatility trading and analysis and trending and development perspective. And this time a year ago, we were all kind of just holding our heads in our hands, just kind of awestruck, covering our mouths in just complete befuddlement as to what was befalling us as the market completely fell out of bed the first day of the year and proceeded to just go on a tear for the better part of about a month and a half or so. So in that first week, it was an extreme shock. I'll have to go back and listen to that episode again because right around that time, the week before, we were all just kind of pontificating here on the show and kind of wringing our hands saying, yeah, it looks like it's going to be a quiet start to the year, not a heck of a lot of vol. Just like this year, Fed had just done their dance. Seemed like the Fed was done and other things seemed like they were done. Earnings didn't seem like it was going to be a big driver, and no one really saw the sucker punches coming from China or the Fed kind of accelerating their thing yet again and all the other things that kind of fed into that toxic cocktail that we started the year with last year. So it was just rock'em sock'em from the opening bell last year. This year, a little bit different story. People kind of taking their time, taking a little bit of a breather, a more relaxing, genteel, if you will, start to the new year. I think some people may find that refreshing. People in the vol space, perhaps not so much. That being reflected, of course, in the ever-eroding volatility. Remember last week and 2 weeks ago, we were kind of saying to ourselves, what's going on out here? Why are the futures ticking up a little bit? Why is the VIX Cash ticking up? It was about 13.5 or so, 1370. We were seeing this kind of influx of vol bit of a head scratcher. Some people pontificating that maybe it was people remembering back to last year and pricing that in and putting a little bit of vol in their back pockets in case the new year kicked off with a bang like last year. Some people pricing in perhaps the Fed coming back to the party early, even though they just did their song and dance. Some of that may be factoring in. Others could just be the mystery vol component that is always ever elusive out there in the vol space. Either way, we are seeing a VIX Cash hovering right around 11.2 or so right now, off a few handles from the last time we all gathered here together. And our old friend VVIX also hovering a little bit lower than where it was last time. It was about the 90 level or so last week. Now about a little bit shy of 80, actually, 79.70 out there or so. So things a little bit quieter out here from a vol perspective. So let's kick it off in the corner office. Mr. Soon-to-be Dr. VIX, a little bit quieter week, but what, if anything, caught your eye here for the first week of 2017?
TY VIX. That's the thing that's kind of standing out. You mentioned the interest rate environment. TY VIX is the biggest gainer since the beginning of the year in the volatility space. It's up from 540 to 576, which I know Mark Sebastian's going to cringe when I say this, but that is a 6.67% move to the upside. The only other volatility index that is even showing any signs of life relative to last year is the gold miners index, which is up about 1.5%. Otherwise, everything is basically flat or down. And one of the things that's a little bit surprising about that is we're at that period of time where we're creeping up on earnings season, and even the implied volatility on the individual stocks is not doing a whole lot right now. Amazon, Google, Apple, IBM, and Goldman Sachs, none of those are really moving quite yet. Maybe as we get closer to earnings, we'll start to see a little bit of a boost out of them. So it's not just VIX that's under pressure. It's kind of everything.
Yeah, earnings season. I won't say I've given up on holding out hope for that to be a huge driver of volatility. Certainly, we see a few moments within earnings season, Google, a Netflix, something else, kind of blowing the doors off or screwing the pooch and completely selling off. And either way, driving a little bit of movement, a little bit of talk, a little bit of volatility. But outside of those, the earnings seasons have really been lackluster for the better part of the last year, if not longer. So, we can always hold out a forlorn hope that earnings will ride to the rescue with a little bit of vol, a little bit of action, a little bit of excitement. But at least for the last, 4 to 6 quarters or so, it really hasn't been the case. We should also mention we did have non-farms this morning, so that also attributing, now that that's done, the final non-farms of looking back on the Obama legacy, the Obama administration. Now that that's in the rearview mirror, another reason why we're seeing volatility taking a bit of an exhale today. Also, most of the major indices up about 0.5% or so on the day. Mr. Greasy Meatball, same question for you. A bit of a quieter start to the year than this time last year. A lot less for you to do, I'd imagine, over there in old Carmen line. But what's catching your eye so far this week?
One thing that I've been paying attention is that if there is any volatility, it could be the Russell 2000. There's definitely some vol there. 17.5 isn't super high, but relative to all the other indexes, there's some juice in there. But a 6.5 point spread, I think, is historically pretty wide. So, and the Russell maybe is the one that seems to be kind of a little slow. Then the only other spot where there is any real volatility is maybe a little bit in oil, but even not there. Some interesting action. Really, I know it sounds low, but bonds. That's where there's any type of price action. They've been moving. VXTLT, TY-VIX. If you're looking for juice on a relative scale, there's some there. There's a little bit in Russell. Everything else is, I think January is setting up for a settle below 11.
Yeah, well, it's pushing that way right now, pushing the 11 handle right now out there in the VIX Cash. So yeah, you're right. If we hang out this realm for the rest of the month and drift lower, that would not be outside the realm of possibility for a settlement that low, because we all know how confounding settlement can be sometimes. So we'll see when all that comes to pass. But yeah, so far a lot quieter start to the month. We've been talking of late about a couple of weeks back. There was that a pretty broad gulf, a chasm, if you will, between the cash and the front month future out there, which is Jan. In the VIX futures term structure, that's of course has come off quite a bit of late, right around 1.5 or so right now, somewhere in that range between the cash and that front month Jan future. So the VIX futures also reflecting a little bit perhaps of a quieter period going forward, as everyone's kind of just trying to process everything that's kicking off this new year. Speaking of the futures, it is indeed a good time, or I should say looking back. We did look back at 2016 a little bit last show. I'll do a little bit more of that on this show as well, including that, just in general, pretty good year to be in the volatility business last year. If you listen to some of our other programs, you know 2016 overall was, shall we say, a light year for the overall options business. Listed options volume down about 2% from 2015. There were some bright spots, though, within that overall sell-off, and one of those being effectively index and volatility products, two things the CBOE has in spades. Let's see, CBOE coming out and saying they reached new all-time highs for the fourth consecutive year last year in total volume and average daily volume in their index products, so obviously SPX and others. 430.7 million for total volume and 1.7 million ADV in the index options, which is that's a sizable amount. Those are both up 6% from 2015. We also saw SPX itself hit a new all-time total with 258 million contracts in 2016, 1 million contract to ADV. So each of those up 9% from 2015. And of course, VIX Futures also setting new records for 2015 with total volume and average daily volume records, again, for a seventh consecutive year out there in VIX land, with 60.2 million total and 238,000 average on the day, both up 16% from 2015. And also in the new extended hours, which we talked about a lot in the Brexit, but also really very much in the election time frame, where the extended hours was where all the action was happening. They set a new record there as well with 6.6 million contracts. That's total in those extended hours, obviously not in one session. That'd be an amazing session. Up 46% from 2015. That was 4.6 million contracts. Again, that's a newer addition, so it's factor that in when you're seeing those numbers. But still, pretty much impressive stuff. Mr. Rhodes, I'm sure the folks over there in CBOE land kind of happy at being one of the few lone bright spots in an otherwise fairly dismal year for options overall.
Oh, yeah. And it really has come from the volatility in the index space. The overall industry didn't have quite the year that we had over here. Just even with low, what's really amazing about the growth in the VIX space, especially the futures, is the growth has come while we have maintained a relatively low volatility environment, which the thing that gets everybody's attention is the high volatility. But pros know that in a low volatility environment, you can actually make money doing the consistent short volatility thing. And that, I believe, is what continues to result in higher volumes, higher trading volumes, not necessarily audible volume from the trading floor here at the exchange.
Yeah, it won't blast your eardrums out, but it will accrete to some live volume. We're working on getting Mr. Rhodes situated. I think, are you on the magical Wi-Fi over there in the mecca of volatility these days, Mr. Rhodes?
No, I'm actually. You know what? Let me try this. No, I'm using my wireless card. Did that help a little bit?
We're getting about every fifth word or so is kind of truncating a bit, so we'll see if we want to make sure
really?
all the folks out there can hear all your pearls of wisdom. While we work on that, let's move on to another we will get to Russell's weekly rundown in a minute. Let's get him situated a little bit first. There is one thing I want to talk about as we get onto this. And Mark, I'm sure this has kind of piqued your curiosity as well. This is something I wasn't even aware of until yesterday. The Fed kind of snuck this study out right before Christmas, which kind of makes me wonder if they didn't really want anyone to see this. But we've talked a lot on this program for some time about the legacy of some of the regulations that we've seen in the derivative space over the last few years. Most saliently, of course, being Dodd-Frank and the Volcker Rule component of that. And I know we're getting a little bit in the weeds here, but bear with me. The Volcker Rule, of course, effectively prevented a lot of the big banks that had been big providers of liquidity in products like SPX and and VIX and all these other products, and effectively prevented them from having trading arms. So what happened is a lot of banks shut those down, or the guy spun off, went elsewhere, but usually it was the former. And so what happened is a lot of people who used to trade these products kind of just stopped. And so a lot of people were starting to, and we've speculated on this many times on this program as well, what was the impact of that? Is that maybe one of the big contributors to not just illiquidity in some of these products in some of the months, but also maybe to more and increased structural volatility going forward? Because if you have fewer people backstopping us against big moves, guess what? You're going to probably have more big moves as a result. So that's been anecdotal, and people have always kind of pontificated that it probably was the case. I know Russell and I, every time there's a CBOE RMC comes by, I'm always asking you if there is some data on this, either pro or con, because that seems to be an area where there should be a lot of research done. Well, finally, I discovered yesterday that there was some done a couple of weeks ago, but to come out by the Fed. And of all things, they studied the impact of the Volcker Rule, and you can find it for yourself. I believe it's called, I have to find the exact name, but I think it's called Volcker Rule, Stress Tests and Market Making Impact of It, or something like that. I'll find the exact title. But what they studied was the impact of this exact rule on one specific area of the space, which was corporate bonds. But I think we could extrapolate some of this analysis to listed derivatives as well. And they focused on downgrades as these stress events. They wanted to see what happened during these stress events in these corporate bonds, to see what happened as a result of these names pre and post Volcker Rule. So pre, when these people were still trading in these things, and then post, when a lot of them had been removed from the marketplace. And what they found, and there's a lot of details, a lot of graphs, I think it's like 40 odd pages, so I'll let you leaf through all of it yourselves. But their conclusion, I'll just read you their conclusion right here, listeners. They said, our main finding is that the Volcker Rule has a deleterious effect on corporate bond liquidity, and dealers subject to the Volcker Rule, and they became less willing to provide liquidity during stress times. And they go on to say, let's see, while dealers not affected by the Volcker Rule have stepped in to provide liquidity, we find that the net effect is a less liquid corporate bond market. They also go on to rule out some other impacts of things like Basel III, which are regulations coming out of Europe. They go on to say also, using these stress events, we find that downgraded bonds exhibit a larger price impact of trading than a control group of bonds. More importantly, the relative level of the excess price impact is larger after the Volcker Rule was implemented than the period just before the Volcker Rule was implemented. Indeed, we find the disturbing result that illiquidity in stress periods is now approaching levels seen during the financial crisis. Again, this is one element of the marketplace, kind of one product in microcosm, but still, this is the Fed. This is not some fly-by-night entity that's throwing, this is not Zero Hedge throwing this out there. This is actually the Fed sneaking this study in right under the wire there towards the end of last year. I really want to dig through it more because I just kind of discovered it and just kind of piecing through it now. But it's kind of interesting, if not disturbing stuff. And perhaps this does support a lot of the things we've been kind of arguing about on this show for some time now, that maybe in everyone's good-hearted attempts to provide a lot more transparency in the marketplace and prevent conflicts of interest, there are some unintended consequences potentially at work. I don't know, Russell, Mark, you guys probably were not aware of this either, but I'm kind of curious your initial thoughts after hearing this.
I am less than shocked. Let's put it that way. I mean, I think we've seen liquidity dry up across the board. What they've done is essentially removed competition. They've put competitors together. They've put more strength in a few players, and they have disincentivized smart risk taking. You tell me how any of that adds to smooth tradable markets, and the answer is that it doesn't.
Yeah, it's always been anecdotal. I always like to arm myself with data whenever possible, and this certainly seems to be, again, not focused on listed derivatives, but I think a clear-thinking individual can make that extrapolation. Mr. Rhodes, you like to always look at data and look at studies. What are your at least initial thoughts on these somewhat disturbing findings?
Well, I'm not kind of like Mark. I'm not the least bit surprised, but it's really nice to see an entity that has the reputability of the Fed, saying something like this. And if anything, you would almost expect it to come out of some sort of industry group instead of the Fed, like a lobbyist or something like that, instead of the one of the chief regulatory agencies, which is part of what the Fed actually does, saying that, hey, maybe a rule change has resulted in something that's not so great for the markets. But there always seem to be some unintended consequences behind every structural change that comes along in the marketplace.
Yeah, of course, when you sweepingly remove a large portion of the players in any given marketplace, I don't think it surprises anyone that it's going to have some, perhaps, as they term here, deleterious effects on the marketplace. You're right, but this is coming out of the Fed, which gives it a lot more bells and whistles and more credence. Like I said, you see this kind of stuff pontificate all the time on some more extreme outlets, but when it comes from the Fed, it got a little bit more weight. All right, with that behind us, kind of an interesting debate. I fully expect that to play out more in the coming weeks and months. Maybe we'll see some corollaries on that are aimed specifically at these markets, which would be kind of interesting. Maybe we'll give Russell some more homework. He gets to do that, add that to his list of studies coming up. Speaking of Russells, plural. Speaking of Russell, it's time for us to break down the first week of the year here from a VIX weekly options perspective. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Mr. Corner Office, soon to be Dr. VIX. What caught your eye in this first week of trading here for VIX Weekly Options?
Well, first off, if the meatball gets meatball music, I want new music too.
So what's wrong with your music? Is the best on the show? What are you talking about?
No,
Yeah,
I want
his music is like, people look specifically listen to this show for your music.
Oh my gosh!
I'd say at least 3% of our downloads, people coming in just for that transition. Maybe 5.
Yeah, folks, listener challenge. Let's get a mashup of Russell comments intermixed with the Russell's Weekly music. I want a full-on mashup, listeners.
Oh my gosh! That when that music comes on and I'm at home, the 3 women that I live with, they hide. And you remember the old Little Rascals when something funny would happen, and the dog would cover his eyes. The dog even covers his eyes at home when that music comes.
But that's the beauty of it. The sheer raw ridiculousness of it is what makes it so beautiful.
So. Looking at the weeklies, not a whole ton going on. One of the really interesting things that I can see on the live vol platform is you get the at-the-money implied volatility for options that are expiring each week, going out several weeks into the future. And January 18th, the number just hit 70.00. The January 25th, it pops to 77.75. And then it kind of plateaus out, going out farther. So there's a big jump between the end of the Obama presidency and the beginning of the reign of Donald Trump. I still cannot. It seems so fictional whenever we say things like that. It just really does. I was talking to an academic today that was calling me and had some questions about Trump being president, and I was like, "Don't you just feel like it like we're writing fiction when we say something like that?" Looking out at those January 25th expiring options. A lot of interest with the January 25th 18 strike calls. The kind of and right now, those are only offered at 35 cents. So, that's the kind of thing that you would buy if you feel like we're going to see VIX in the 20s or so right after we get a new administration. Other than that, not a whole ton. I think as we get really close to the inauguration date, I'm going to have a whole lot more to talk about with respect to what's going on with the weekly options.
Yeah, we have that big Jan 20th date looming on the horizon, and those weeklies would certainly fit that bill for something perhaps to drive some activity. And you're right. Whenever I hear the Trump inauguration, I just flash back to that Simpson episode from what was it, about 10, 15 years ago, where they jokingly referred to President Trump in the future, and then lo and behold, they were prescient as always. Well, other than that, it was a fairly light week, like we mentioned, overall for the mothership VIX options themselves. The ADV, right south of 550, actually, continued to kind of trail off towards the end of the year last year when it started off around 600,000. Again, reflecting kind of an overall light year for options volume last year. Right now, it's right around 544. Today, though, looking fairly decent. About halfway through the session or so, a little more, and we've already got about 400,000 contracts on the tape. So perhaps today will be the bright, shining spot in the sea of otherwise fairly light volume. Most of the days this week, though, over 400,000, which is a good sign. And today looking like it's going to hit that level, obviously, too. So perhaps today will be the start of a return of volatility, particularly as we approach the 20th and perhaps some potential kickoff to volatility there. Looking at the hot strikes for the top 10 here, looking back on what the hot ones are for this past week here, and just in general, the hot open interest strikes right now. Number one, with a mild bullet, not as robust as it usually is on our top 10 list. Usually we see this number one spot, 350, 400,000 contracts. Easy today. A little bit lighter to the tune of 210,000 for the Jan 23s, followed by number 2, the Jan 20s, with about 178,000. Number 3, the Jan 21, so a nice little Jan call strip there, 176,000 open there. Down to number 4 for the first Feb on our list, the Feb 30s. Once again, the 30 strike. We have a listener, I think, comment about that a little later. But again, the 30 strike just refuses to die. 167,000 open there. Then down to the Jan 22s, 163,000. Number 6, the Jan 25s. About 160,000 open there. Then to the Jan 30s for number 7 with about a little under 150, 149,000 contracts open there. Number 8, the aforementioned 18 strike. These are the regular Jans, though, the Jan 18s with 150,000. So perhaps some people starting to play in there and saying, that Jan 18 strike looking a little attractive with Trump on the horizon. Number 9, the Jan 17s, even more aggressive there, 149,000, so right on the heels there. And number 10, our first and only put on the list, the Jan 13 puts with 131,000. So some put players coming on into the marketplace this week as well. About a total of nearly 6 million contracts, about 5.9 million open total, about 4.4 on the calls, and about 1.5 million on the puts. Mr. Greasy Meatball, in this quiet kickoff to the start of the year, any activity out there in VIX land really catching your eye this week?
We are seeing some people take this opportunity with the VIX at 11 to try and get some hedges maybe a little closer, some hedges that don't need a big move to work. Here's a couple that we've seen today. We've seen a relatively large buyer of the 14-16 call spread in January. He paid 18 cents. And then we saw a 15-17 call spread buyer pay a dime. On top of that, the single biggest trade of the day, guy bought electronically 50,000 of the Feb 21 calls, paying 49 cents. Those were kind of the biggest trades I've seen today. So generally speaking, lots of sneaky upside. And then we do see some people starting to try and bottom feed a little bit on puts, maybe a few 12 and 11 put sellers because there's some actual juice in some of those names. Notably, there's been some decent activity on the Jan 12s and Jan 13s today.
Yeah, so there are some people out there playing Feb 21s. Maybe that'll be a new addition to our top 10 next week if that trade continues throughout the week. But meanwhile, though, we're going to move on to the commodity space. And again, the product that seems to be catching our eye out there and continued to most of last year as well. was crude. Crude being one of the interesting players from a vol perspective. We talked a few times now how it seemed to set a floor for 2016 at least around the mid-30 level, then proceeded to break through that oh so rudely to the downside right towards the end of last year, perhaps surprising some people who were fairly new to the crude complex. Continuing that narrative right now, shy OIV and OVX shy of the OIV at least shy of the 30 handle, right around 29 or so. OVX right around that range as well. OVX and actually OIV were a little bit more. Usually they're pretty much in lockstep. OVX was actually markedly higher earlier this week, which was kind of interesting development that we don't see very often, perhaps reflecting some interesting trading going on back and forth between those two products. Anything out there? And again, a relatively quiet week. And if you're really into, obviously, commodity vol, stay tuned. Immediately following this program ends about 1 p.m. Central, right around 1:30. We're going to go live with TWIFO this week in futures options with our friend at Quick Strike over there, as well as CME Group joining us on that program here for 2017. So stay tuned for that if you're hardcore into all things commodity, volatility, and skew, because we got you covered. Going to be looking back at 2016 across a broad spectrum of products, including crude in a little bit. But before we get to that, Mr. Rhodes, Mr. Greasy Meatball, I think catching your eye out here this past week from a crude or maybe any other commodity volatility perspective?
The drop in GVZ has been kind of dramatic. We've got it under 15 right now. With the change in administration and the possibility of inflation, and I'm kind of surprised that gold volatility is under pressure, especially when the gold miners volatility has held up relative to where it was at the end of last year.
Yeah, gold has been a weird, story, particularly towards the latter portion of last year, where we saw that kind of aggressive sell-off begin after a few spikes there post-election and post-Brexit, where everyone and the mother wanted gold calls. And even on TWIFO, we were talking about, it seemed like the new range was going to be north of 1,300, and then all of a sudden, bam, we see, back down in the 11 handles and 11, 12 in that range for the risk reversal. So it's been an interesting one to watch. And you're right, GVZ, if you're not familiar with it, listeners, that is, of course, the CBOE Gold VIX, and hovering off about a half a handle today, hovering well shy of the 15 handle. And if you're not that familiar with that product for the better part of the last year, that is pretty much right around the floor that it's been hitting for most of that product. It hits sometime into we've seen it bounce down into the 13 handles a few times, and one perhaps aberrant print way down in the 11 half range or so. But other than that, this is close to getting near the lows out there. So maybe if you are indeed intrigued by commodity volatility and you're interested on the long premium side of the fence, maybe this is an attractive time to start looking at some gold vol. Meanwhile, though, speaking of volatility, it's time for you guys to weigh in. It's time for us to check in on our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, guys, welcome to the Volatility Voicemail. Like the man said, this is the portion of the show where you guys take the reins with your questions, your comments. We also have a few questions for you guys that we'd like to see your various thoughts on. We actually kicked it off with a couple interesting questions this year. I'll give them to both of you guys and let you see. Give them both to you guys, I should say, and let them see how you guys feel, what your thoughts are on these. First off, we started the year, our first question of the week this week was total options volume down about 2% last year. How is 2017 going to stack up? And we gave you the choices of about the same, so about plus or minus 0.5% or so, or a modest increase up somewhere from 1% to 2%, modest drop, so down somewhere from 1% to 2% compared to this year, or a big change in either direction, plus or minus 2%. And then we also asked you guys, just right before the show, we thought we'd throw it out there to give you guys a little bit of extra gristle to chew on. We said, hey, we gave you a little pop quiz for the new year for volatility. We gave you the $1 trillion question, where will VIX close at the end of 2017. After all, we did it last show. We figured it's only right that you, the listener, get to weigh in as well. We gave you made it a little easier for you, gave you 4 choices. Below 12, between 12 and 15, between 15 and 18, and over 18. So maybe Mr. Greasy Meatball, we'll start with you. First off, what are your thoughts on the volume? Do you think volume is going to be a little bit higher, a little bit lower, about the same, or a big change compared to last year? And then what do you think our listeners are voting for where the VIX will close?
I think that from a volume perspective, I think you're going to see a big increase.
So you're going for the big change one, over 2% to the upside.
Yeah. Oh, for sure. I think you're going to see some serious fund inflows this year, based on what we've seen in the last month. Then in terms of where it's going to, I'm going to go the 12 to 15 route.
A reasonably safe guesstimate there. Can't go wrong with that one. Mr. Rhodes, same question for you. What are your thoughts on volume? What do you think is winning our volume poll? And then what do you think is winning? Because you already voted on VIX last week. So what do you think is winning our VIX poll?
Well, my vote on the VIX poll, and then what do I think is winning?
I think you already voted last week on the average, so I think we're good. If you want to vote again on where VIX will close.
No, I did that. I was for the poll. You want me to tell you what I think and then tell you what I think everybody else thinks?
If you feel so inclined, sir.
I think that's what you mean. I actually believe that we're going to get a pretty big change in volume to the upside because I think the rules are going to change and you're going to see some participants get to come back into our market. As far as guessing, I would assume that the folks, and you have to think about the people that listen to us, they love options. They can't understand why more people aren't trading them, so they would at least think it's going to be a modest increase, but probably a big change to the upside.
Yeah, it's it's interesting. First, we'll start with the VIX one because I have this data. Again, this was only posted right before the show, and it's only going to be up for a little bit. It's not a whole week, just an hour or two. So, quick snapshot of what you guys are thinking. But so far, our audience here, they're completely split. 43% super hardcore saying over 18. The VIX will close over 18 for the year. Again, reflecting some perhaps new structural element of volatility that's going to come into the marketplace before the end of the year. And then about almost the same amount, about 38%, saying below 12. So we got quite a chasm in our audience. Wow. Some people saying nothing's at all is going to happen, and other people saying the year is going to be kind of rock'em sock'em and close over 18. So, wow. I guess that's what makes the market. And the other two kind of paltry in between, 14% for between 15 and 18, 5% between 12 and 15. If I had to make my vote, I probably would say in that range. But that's kind of, I think history is on the side of that one, but still. Interesting gulf in our responses. And as for the question of the week, you guys both said big increase, which is kind of interesting. I myself have been more in the modest increase. I think somewhere in the 1 to 1.5 could be expected. 2% would be a pretty aggressive increase, but it could happen. Above 2 is a lot, and that our audience seems to be leaning that way as well. 43% so far saying a modest increase, up 1 to 2%, followed by 34% in your guys' camp. Big change. We didn't specify a direction. Twitter, it's only 4 choices, so got to draw the line somewhere. Upper plus or minus over 2%, getting about a third of the vote. With 16% saying about the same, plus or minus 0.5%, and 7% saying a modest drop to the downside, 1 to 2%. If you haven't voted yet, at Options on Twitter, make your voices heard, particularly on that pop quiz that's going to go away pretty quick. The question of the week will be there till the end of the week, till Sunday, so you got a few more days there. But still, if you haven't voted, make your voices heard. If you don't like what you're hearing, change it. Make your voices heard. All right, we got some people come writing in. First one, the comment, this comes from Alaran. He says, this kind of goes back to what we've been talking about a lot on the show. about the surprising resilience, popularity, call it what you will, of the 30 strike, kind of across the board, regardless of month, Jan, Feb, June, whatever. The 30 strike seems to have some sort of resonance with the trading populace out there for VIX anyway. He says, I think the 30 strike is popular each month simply because big insurance firms need to hedge themselves against calamitous markets events. VIX greater than 30 equals a calamitous event in the eyes of many. I can see what he's thinking of here. The only issue I would take with that is that a lot of it is front month trading, and that's not usually where these big firms play. They buy Vega much farther down the curve than Jan. But that said, I don't know. What do you think, Mark? Or what are your thoughts here on his reasoning, his thought process behind why the 30s continue to remain popular month after month?
Yeah, I mean, I think that there's some truth to what he's saying. It absolutely is somewhat related to calamity. And then, it's a strike that you can set some consistency. I mean, to be fair, if the VIX is over 30, things are wrong. There are all sorts of levels. 20, not necessarily. But if we're over 30, something is seriously wrong.
Mr. Rhodes, your thoughts?
Seriously wrong if we're over 30. I like that. I think that's a way to understate it a little bit. That means there's something really going on, exciting in the world.
Yes. wrong, but exciting.
Wrong, but it feels so right for.
Yes, 30 is the snuff film of the trading industry.
Oh my God! We have a nice line that you're not supposed to cross, and the meatball jumps over it.
That's kind of always the debate, isn't it, too, of where that inflection point, that breaking point is in VIX, where it's just too much of a good thing and people take their ball and go home. People have all different, it kind of varies depending on your risk tolerance, obviously. Some people draw that line at around a 25. Say beyond that, it's a little bit too much vol. People are going to kind of sit on their hands a little bit. A lot of people think 30 sounds like the greasy meatball is in the 30 camp, where 30 is the breaking point. And north of that is as our friend Allerin says, calamity ensues. So something's got to be driving this paper every month after month. If they're just rolling 30s every month, they're doing something wrong. They should probably listen to the show a little more. But there could certainly be something to that. Someone's out there buying these 30s and trading them in mass. So something's got to be driving that, right? All right. What do we got here? Oh, a question from Julio. Julio Chave, I don't know. He says, Happy New Year to the Vol Squad. Well, Happy New Year to you, Julio. He says, in the spirit of the new year, when are we going to get some new VIX products, particularly Monday through Friday, weekly VIX options? Mr. Rhodes is the senior man in charge of all VIX products, and when they release to the public, what do you have to say to our friend Julio?
They won't let me know because I can't keep secrets. But I do know that there are some things in the works. I believe there are going to be some attempts to relaunch some things from the past, and I'm going to leave it at that because I like my job. But we definitely are not, our product development and research guys are not taking any kind of break whatsoever with respect to trying to grow the volatility space. So, just pay attention. As soon as I know something and I'm allowed to talk about it, everybody else will know it as well.
What could you possibly be referring to? Maybe the return of our much beloved VXST that died a premature death and now really has no reason to exist with the weekly fixes. That'd be kind of funny. That'd be great for our show if VXST would to return. We certainly would have a great talking point. But I think, Julio, it's a matter of time before what you're asking comes to pass. Whether it's this year or not, I don't know. I'll have to think about the delta on that. People have been asking us this for some time, so if that's any indicator, people want these. It's just, it's a no-brainer, Monday through Friday weeklies. You got essentially a daily at that point, so you can pick your poison. You want vol on Wednesday, you want vol on Friday, you can have it. So I think given the fact that CBOE and CME, a bunch of other big exchange groups, are starting to embrace more weeklies, it's probably only a matter of time before you do get that. Whether it's this year, I don't know. Other folks will have to make that determination, but it's an interesting question there. Let's go on. Let's see. What we got here? We got time for one more. This is from Savage Land. I like the handle. Good handle. He gets points for that. Hey, VIX crew, why would I trade anything other than call verticals or ratio verticals in VIX options? Seems like the product is designed exactly for that type of trade. Oh, he has the same question. Also, when are they adding more weeklies to VIX? Well, we did the second part of that already. The first part of that, we do talk about a lot of that here. And whenever we break down VIX options, a volume, not so much in the weeklies, but more in the regular monthlies. 1 by 2, sell 1, buy 2 is kind of the order of the day. And when it's not that, it's straight up call buying or call verticals. So I do feel what you're saying there, and that VIX is call heavy for a reason. And if that's all you wanted to trade out there, I could see some reasoning for it. That said, Mr. Greasy Meatball, you did make a relatively elaborate defense of the ratio put spread. So the 1 by 2 or maybe 2 by 1, depending on how you want to do it, out there in VIX land, as opposed to the call spread. So maybe you should explain to Mr. Savage Land why he should entertain other strategies other than call verticals and ratio verticals in VIX options. And maybe you should also unmute your button. You there? Did we lose the meatball?
Well, I can do my meatball impersonation, or I can.
Your voice is not nasally enough, but otherwise you can try.
Are we good?
Can you hear me now, sir?
Go.
No, well, Russell, you can go first. You do your best impression of me.
I'm not going to do my impression. I'm just going to say that, that the puts give you a lot of opportunity to take advantage of persistent low volatility environments. So in addition to trading the spreads that you guys ran through, which I do think are wonderful trades, they give you a dollar cheap method of being prepared for the next spike in volatility. I think buying puts or putting on bearish spreads with put options isn't such a bad idea as well, because you can benefit from, especially in the second half of last year, how steep contango was, and the front month future working its way down to the spot index on a monthly or even weekly basis now.
There you go. Mr. Grease Meatball, anything to add to that, sir?
Yeah, I think Russell hit the nail on the head. And then there are other alternative smart ways to hedge. The straddle versus upside call is another way to do it. There's people like trading strangles on these things, condors. The strategy should fit your portfolio. Are you hedging? Are you looking for an alternative way to hedge? The idea that why should I do anything other than this? If everybody believed that, I guarantee you, someone would be making money hand over fist on those people's opinion. It's the fact that there are so many different ideas that I think are really valuable. So, I'm with you 100%. I don't see why you wouldn't. So, and then in terms of stuff, I've been told, I asked them like, hey, what's it going to take to get at one time I asked, what's it going to take to get a Friday settle of VIX, and the problem is that you would have to make your SPX options expire on like a Sunday, and so you can't do it. So, VIX is a little tricky in that I believe right now they could trade VIX options on Saturday, Sunday, Monday, and Tuesday, along with Wednesday. And Thursday and Friday generally line up against Saturday and Sunday, and those are the days that you'd want to start out with. So that's one of the problems with daily expiration on those days.
There you go. The devil is in the details when it comes to the VIX calculation. Saturday, be a huge day for VIX options. We'll have to see that one listed. All right, it's time for us to keep on rolling. Great questions as always. Time for us to keep on rolling into Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Like the man said, this is the portion of the show where we go out on the volatility limb, the bleeding edge, to try to predict what the ever mercurial vol gods hold in store for the coming week. We didn't pick for this week because last time we got together, last week, we actually picked for the end of the year. So I'm going to go back 2 weeks to the last time we all picked volatility together and see who was the closest there to what we have right now. And actually, I picked 11.25, which is almost exactly what it is right now, 11.3. So, and Russell was 12. Russell was closer than he has been in a while. The ghost of Mark was 5.2. So unfortunately, he was not close at all. So I guess that means I go first, or I get to choose who goes first. But I'm going to go first because it's more fun that way. And again, looking forward to the week. We were talking about, there was a little bit of vol last week. Non-farms came and went. That vol has kind of come and gone as well. This time next week, we're going to be talking about the inauguration, but it won't be here quite yet. So what impact that will have, also the looming impact of potentially the Fed, but I think more maybe earnings as well. How all that stew is going to be mixed together. This is me just doing my live analysis for you listeners. I think we're going to be slightly higher to this point next week, but not a lot. I think maybe I'm going to say 11.5, even though it wouldn't surprise me if we are shy of the 11 handle this time next week. That said, who else is close? Russell, you get to go next.
I'm going with 10.99. I give up.
Oh, you Price is Right. Yeah, this is the first time you've gone lower than me. Maybe ever.
I give up on higher volatility. I think the only way that volatility is going to go up is if I say it's going to go lower. Therefore, I expect us, as we speak, as you guys speak, I actually will not be available this time in a week, but as you guys speak and make fun of my estimate, it is 10.99.
Oh, so that's the sound of a broken man, listeners. He's been
I
broken.
am a broken man.
He's been broken by a year of missing.
I am a broken man.
A year of being broken in the crystal balls, finally. Now, who knows? Now you've turned to the dark side, Russell. Maybe that VIX of 18 prediction our listeners is making is going to come to pass. Maybe you are the catalyst, sir. All right, last but not least, Mr. Greasy Meatball, what are you feeling for next week, sir?
All right, so Russell's 10.99. What were you, Mark?
11.5.
11.5. All
That's
right.
quite a strangle.
I'll take 12.01.
Wow, going a little upside over there. You're getting Russell fever over there?
Yeah, well, it helps my position for the VIX to drop, so I'll bet against it.
There you go, listeners. True words, predicting against himself to make it come to pass. I like it. Well done, sir. Well said. We'll see how this is topsy-turvy start to the year. Russell's low, Mark's high on vol. Dogs and cats living together, mass hysteria. All right. That music means we've come to the end of another excellent, interesting, surprising foray through the world of volatility. Some surprising picks, some surprising data out of the Fed that we'll sink our teeth into more, and a lot of other fun stuff, and an otherwise quiet start to the year. But before we go, let's start with Mr. Corner Office. What's cooking in the land of CBOE, as well as with our friends over there at LiveVol?
Well, I will be visiting with the guys from LiveVol in about a week and a half. CBOE is kind of in a holding pattern for things that we don't really talk about publicly. And I'm going to be kicking off the global tour once again with my first trip of the year to Stillwater, Oklahoma next week. But after that, I'm going to Inside ETFs, and then I'm going over to Europe to do some classes on VIX for some VIX Futures traders.
I thought you were done with the Dr. VIX tour.
Last full week at school.
Oh, there we go. Then the Dr. VIX can come to fruition. And Greasy Meatball, same question for you. What's cooking in the start of the new year over there at the pit?
We're launching our Volatility Masterclass here at Option Pit. You go to optionpit.com/events. Our pre-sale is $997. And after the pre-sale is over, it's going to $1,800. So get your pre-sale in quickly.
Get on it, optionpit.com to learn more. Their Volatility Masterclass. Check it out. You get a nice little paper, say you have a master's, so you too can have a master's degree over there at Option Pit. And on behalf of the Greasy Meatball and soon-to-be Dr. VIX and indeed myself, I want to thank all of you guys for tuning in all of last year and, of course, for joining us again in the new year. Stay tuned if you are in the live chat. We'll be back in about half an hour for TWIFO This Week in Futures Options. Some new bells and whistles on that program, so look forward to that. And we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.